Well, staying with advertising, despite overall gloom as companies pull back on their ad budgets, Netflix is charging ahead. The streaming service rolling out its ad-supported tier in the U.S., with experts and analysts shrugging off those concerns, even as competition grows within ad-backed streaming. Let's bring in Yahoo Finance's Allie Canal, who's been looking into this. And Allie, I guess, the question is, what's the bar here for Netflix at a time when ads have been slowing down across the board?
Well, I think for a company like Netflix, the bar has already been set high, right? The platform confirmed that it sold out of nearly all of its ad inventory globally for the launch. And that optimism has been echoed from both analysts and ad experts alike. I spoke to Kevin Krim. He's the CEO of advertising measurement platform EDO. And he described this as a, quote, pivotal moment for the media industry. He also cited Amazon's Thursday Night Football as another watershed moment when we had streaming, subscription, and ad-supported go to the masses. And now with Netflix rolling out ads, Disney right behind them, this is the new future for consumers and the new future for tech companies. For Netflix, it's reached peak penetration in the North American markets, and this is a way for them to really capture more subscribers. There have been some concerns that consumers will trade down, but analysts have said that it's actually a spin-up opportunity, a chance for Netflix to secure more revenue, increase profits. That's in the name of the game on Wall Street right now, and Netflix needs to capitalize on that in order to remain at the top of the streaming wars, and advertisers seem on board with that as well.
Yeah, Allie, when you look across the streaming landscape, those like Hulu have been early on with the ad-supported tier. Netflix entering into new territory with Disney Plus right behind it. What's the big risk for Netflix?
It's 100% a super big risk. If we think about the programming on Netflix, it's a lot of mass content, right? It's global. A lot of it is considered quote unquote niche, and that's where we could see some potential tension. Advertisers, they like to play it safe. They want content that captures large audiences, and that might challenge Netflix's current content strategy. Another potential risk could be when it comes to acquiring new licensing agreements to run ads. Netflix warned that about 5 to 10% of content will not be available on the ad tier due to those ongoing conversations with studios like Disney and NBC Universal. We had a new Wall Street Journal out report earlier this week that noted that shows that are really popular on Netflix, like Grey's Anatomy, The Crown, You, they could potentially be impacted by this. So that's something that they'll have to figure out. And then finally, another issue is just ad integration, right? How will this interrupt the binge model that made Netflix so successful in the first place? And how can the company really tackle those measurement tactics to lure advertisers amid all of this competition? So these will just be some of the growing pains, but Netflix signaled that it's ready for the ride. They're ready to innovate, and that potential is what's driving up the stock price higher, up more than about 35% over the past 6 months. So analysts ready for it, investors ready for it. We'll see if consumers are ready for it too.
Yeah, the counter argument being that this actually might not be a bad time when consumers are trying to pull back on spending. So we'll see where those numbers come in. Allie, thanks so much for that.